What's happening, guys? We got another Sunday scan coming at you, this time for December 19th and the week ahead. As you can see, came back up to the beach. It looks a little bit different than videos in the past. Yesterday was the kind of ribbon cutting, if you will. There was no ribbon. We didn't cut anything. But we did not see it in the last 6 to 8 months while I had my friend renovating. I gave him full reign of all choices. I like his house at home. He built his own house. I like his finish work. I like his ideas. And so he had given like some floor options and things like that to me and my wife. And I was sending them, from him to her, back to me, back to him. And, after a couple of like back and forth of, well, let's do this, let's do that. Well, this one takes a few more weeks. This one takes a few more days. I was like, you know what? This is getting a little out of hand with all the other projects that we've got going on. I'm just going to give him full reign. And he went for it, loved it, and he crushed it. Absolutely crushed it. The houses came out amazing. And so we're pretty excited to be back. That said, we had a couple different sleeping quarters last night. And unfortunately, my son is sick and decided to cough in my face. So I might lose my train of thought today a lot because I am super dead tired. At any rate, COSM. COSM was crazy. Really big opportunity, really unique situation. Haven't seen it in a while. NRBO was the last one, maybe TBLT. NRBO had trade breaks. TBLT did not. I would say I've been trading about almost 20 years now. I think this is year 19 or something. I would say it's happened 8 times, if I were to guess. 3 to 5 recently. Within the last maybe 3 to 5 years. But I remember it from other times. And it was before I kind of knew what it meant and what the opportunity was. And it's not always just, as, I don't want to say easy as this particular trade was. But typically the trade gets, they end up breaking the trade. And so what does that mean? So I spelled this all out pre-market because I've been here before. I've seen this trade before. I've participated in trades like this before. And for anybody that took the long side of the trade, I felt it important to kind of warn that if you do sell, you do have an elevated degree of risk in the event that they actually break the trade. So what does that mean? So COSM was about 30 cents the day before. So let's just say you had 100,000 shares. And it was a $30,000 position. You wake up on Friday, you've got 100,000 shares, and the stock price is 6, 5, 4, and it obviously dropped down to 1 pretty quick, and then 50 cents, etc. And you decide, oh, wow, I'm rich, I'm going to sell, and you don't realize that there's a reverse split, or you don't, or you think you're going to kind of get away with it, right? Maybe they won't. Notice I can sell, I'll make $500,000 and, don't tell anybody, nobody will see it, hope for the best. And then you end up short 96,000 shares, right? Because if you had 100,000 divided by the 25, you should have only had 4,000 shares in your account. And instead, you've now sold 100,000, so you're net short 96,000 shares. That's exactly what happened. And the problem is, those are the people that got short. Those are the people that had to come back into the market, whether that was individual traders or if the clearing firms took it on the chin. I don't know that answer, but that's where the original short position came from. And then as the trade continues to go up and up and up, there's new shorts that are coming in because of the price, right? Because they say, oh, it went from 25 cents to $3 to $6. It's got to pull back at some point, and then it goes to 9. It's got to pull back. 15, 20, and it blows everybody out into the close. So the risk, the reason for the risk as far as a long side trader like myself who bought 50 cents up to 70 cents, I had a 62 average. The risk is that if they decide to break the trades prior to a particular time or under a particular price, right? That's the 2 ways that they would break the potential trade. If that's the case, and I bought 100,000 shares at 50 cents, and it goes to $1.50, and I say, hey, this is great. I just made 100 grand on 50 grand. I'm going to take the trade. Then you end up short that 100,000 shares if they break trades under 50 cents or under $1. So that was the real risk. And that's why I said on Twitter, in the room, and on broadcast, if you did get long, in my opinion, it's best to hold until we know for sure that they're not going to break the trade. To me, that meant open. If they're going to let it trade as normal after open, they really shouldn't break the trades after that. If they did, they should have halted the stock, figured it out. And so to me, after 9:30 a.m., I felt very confident that they were not going to break it. But there was still that doubt. So I stayed in, and I stayed into the trade until got a little color from Interactive Brokers, from a few folks within within IU that have good relationships there that can call in and get a real trader who knows the real answer. And they had said the exchange is not making any changes and all trades stand. So that was the first sell that I made, that I said, you know what, I'm going to just at least take 25% exposure off. That way, if they do break it, I'm not, too crazy on the hook for, a lot of shares, but, it'd still suck. But anyway, that's exactly what happened. And so it was a very unique situation. I've only seen it, like I said, less than, two handfuls. It was amazing. And I can't believe that they did not break the trades. And one of my good trading friends, I was right there watching him make his career trade on Friday, which was really awesome to see. So it's always fun to see others. I mean, in my opinion, you should be happy for others, making that career trade. But it was really neat. So anyway, that's COSM review, and hopefully the comments pre-market on Twitter and in the room helped kind of understand that situation. And honestly, the patience that I had to hold that, it was just fear of potentially having a trade break. It was not patience. Typically, if there was no fear of a trade break, I probably would have sold at $1 or $2. Let's be real. So anyway, let's see. Had a couple other notes, and then I was going to go over those two things that I talked about. Actually, one thing, one kind of situation that happened last week, ICVX. I wanted to go over kind of the mindset of that particular trade, as well as something to do with TAL. So I'll do that once I'm on the video sharing of my screen. But let's dive into a couple other things. I asked for a couple questions on Twitter, so I'll get to those. And just one other thing before I get into that. I feel like, everybody knows that I use like a community of education and a clean trading floor. But what I don't think a lot of people know is how much technology that we've actually built into, what we offer. So if you are a member, I would encourage you, at the very minimum, check out the tape burst, check out the price alerts, but really start on that I. If you hit the I at the top of the chat, there's a whole bunch of features, as well as, the Twitter type push throughs and other scrapers and things like that we have built in to the room. So I feel like I don't talk about it enough. So I want to remind everybody that is in the room to make sure that you are actually checking out all the technology that we've built from scratch to benefit you and give you an edge in trading. So let's get right into the couple questions that I picked from those that sent them in. Then I will get into two trade recaps, and then I will get into scan for the week ahead. First off, can you define a reactive trade? You use this terminology a lot, and I am still not clear on what exactly you mean by that. To me, we react to all sorts of price action, but feel like there's something more behind it. Any link to a parabolic, gap up, or other setup. So reactive trade for me is when there's an A+ setup off the open. Now, it's rare lately that I have a reactive trade right off the open. And I always say I'm kind of hands off the open unless we have some sort of, chart that's up, and then it has a major gap up, parabolic move. I'm going to react to that move. That's a reactive trade. Reactive trade is when you are going ahead and taking risk before maybe that V-shaped recovery or before the top. You're okay based on the setup and knowledge that in the past, the majority of the time when there's this exhaustion move, whether it's to the upside on a squeeze or the downside on some kind of stop or flush out, majority of the time is knee-jerk reaction back up. So as long as you're okay taking a position and being wrong, then you're sized correctly. If you can't go any lower, then you shouldn't be taking the trade at all, in my opinion. So that's sort of the reactive trade is something where if X happens, then I will do Y, right? You're prepared for it. You are expecting it to test a particular level. If it does everything that you're prepared for it, proving you right, that you had a good read on it, that's the trade that I want to take and put my risk on. So that's sort of the concept with that. Next one was, have you been nibbling in your IRA? And if not, are you just waiting for capitulation or when the Feds pivot? So no, I haven't, I'm assuming you mean sort of like a long-term, buy, in the IRA. No, I use the IRA for the big picture ideas that I post. And, you saw on, I forget what that other penny was, that was 17 cents and ended up going to 45 cents. Bigger picture ideas that I don't want in my day trading account. If I put them in my day trading account and it pops up, I'm probably going to sell it. Things that I want to give a little bit more leeway to, things that I want to let work is what I store in the IRA. That's all I really use it for right now. I have, I'll build a real estate portfolio or something like that rather than, stocks. I don't like the exposure, especially, when you have kids and you try to get away and it's just so easy to come back to the desk or something happens. I just feel like anytime that I've got a lot of size over, it just starts to kind of pull, part of you back and you're never 100% present. So it's just my own personal choice. That's different for everybody. Everybody's in a different spot. I know a lot of great traders that absolutely crush it with swings and things like that, but it's just not for me at this stage. If you started out as a scalper, what did you change or force yourself to do in order to reach deeper targets to break that pattern? So I don't see a problem with scalping and I guess trading for income, right? So there's that point where you trade for income to the point where you no longer need to trade for income. And then in my eyes, you can start to look for bigger picture type moves, because here's the thing. You're going to have bigger picture trades and you're going to be dead right. And you should have scalped that trade because it ends up coming all the way back. So there's going to be frustrations either way, whether you take the scalp and you're frustrated because you didn't let it work, as long as you thought it, it could have unwound and you should have done this, should have done that. But at the same time, you're going to have those same frustrations the other way. The difference is that with the income, you can take it, and it builds up. With letting things work, it's because you don't need that income and you have the ability to kind of let it continue to work for you. So if you're in account growth phase where you're trying to build your account to the biggest possibility for you to really have a real shot at this, then I wouldn't trade a thing for that. But as you start to progress and move into a different style of trading, I would absolutely go towards the bigger picture, kind of letting the trades work for you. For my style, anytime that I can't leave the desk, I'm either in too big or not enough, edge. I don't want to be in a situation where, I can't leave the desk. And that to me gives me that little inside look at whether or not maybe I'm too aggressive or there's not enough edge, or like I said, I'm too sized. So, yes, I do think that scalping is good to build the account, but at some point you have to look at the big picture. And that could be, literally just trading a few hundred shares just to get used to it. Get your brain used to like, all right, I'm going to let this work. Leave 100 shares on, to trail, just to get used to. That's what I tell a lot of people that ask me in the room. They're like, how do you just get past that mentality aspect of it? And I always just tell them, leave a couple hundred shares on, and just let it do its thing so that you get used to kind of managing this position for a longer period of time. But that's really it. I mean, it shouldn't take too much to break it. But as you've seen from my other videos, there's also frustrations by being too patient, right? And over the last month and a half, I've talked about how I've really minimized my trading and not been performing up to, what I should be. Not because I'm not finding the trades, just because I'm being a little too patient and it came back. So just understand that it's not, just that easy to be like, all right, I'm not going to scalp. I'm going to get out of this frustration. No, there's frustration every single day with trading. Last question. When did you have the biggest drawdown in your trading career? What mistake did you make? How long did it take you to overcome the drawdown and go back to highs? Show ticker and chart if possible, please. So everybody knows that has been following me for a little while. It was Kodak, was the big drawdown. I think it ended up being about $1 million, either 1 or $1.2 million, something like that. It wasn't fun. It was my worst loss of the career. And, I've had some crazy swings since then. It was kind of, 2020 and 2021 when everybody had some ridiculous moves. I've had close calls to that. But then I started to manage my risk, automatically so that would not happen again. There's nothing worse than working so hard and then just having it taken away on, some outlier move that, you shouldn't be in. You got stubborn, you got reckless, and you just kind of went into see what it does mode. I've always been a heavy preacher for that max stop. It will save you. It saves me. But really the key to making that back is not to try to make it back, right? Go back to business as usual. Focus your sight, your target, your goal on something 2, 3, 4, 5 months out. Have realistic expectations. You're going to check off those boxes a lot faster, but you have to fix your mind first. And you can't just throw everything away that built you over the last, 3, 4, 5 months or a year or whatever. You can't just be like, oh, well, everything doesn't work anymore because of that one trade. It was an outlier event. You got stubborn. You overstayed. You got dumb. We all do it. But there is a way to help fix that so that you don't get run over in the future. So that's it for the first part of Scan, and we'll get into some ideas and a little bit of a recap for tomorrow. All right, guys. I had to switch homes. It's a little bit different backdrop, but my Wi-Fi stopped working. I have to have them come and fix it this next week. But I came over to my sister-in-law's to finish this and then upload it, and we'll get it out to you for 6 p.m. But first and foremost, as always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're here to be told what to buy or sell, as always, you're in the wrong spot. If you're here to kind of learn what makes a good trade, what made a good trade, what's working in this market, what's not, what am I getting chopped up on? What am I losing on? What am I making the best trades on? Then you're in the right spot. And that's my goal every single Sunday. And hopefully you guys do benefit from what we cover. All right. So as I said, I wanted to go over 2 things. And one, I'll go over the easiest one first. Tal, pretty clear opportunity on Friday. Well, lack of opportunity, but basically was waiting for particular levels to confirm, particular levels to fail, and unfortunately they didn't, so the trade never really came. But what I wanted to go over is the concept of, are they sellers or are they shorts? And we don't know until you get that swipe back. And I always talk about building in swipe risk. We talked about it last week on the video. And so this week I want to kind of show you, and we did this every single day. I'm showing you this now. And although it's after the fact in hindsight, we actually did this real time in the room, as well as the next discussion on the ICVX trade that was really, really good, that I just want to kind of, dig into as to why it panned out the way that it did and how maybe you could trade it better. So for example of Tau, yes, you look at the chart and it's been straight up, same thing, maybe not as overextended as something like GOTU. Obviously, that's a perfect A+ setup for me if it has a big gap up parabolic move. That chart should look familiar. But a situation like Tal is in that same basket, same thing with EDU, right? So as I've been saying, yes, they are short targets. That does not mean that they can't just keep on going. You've seen FUTU just keeps on going. You've seen PDD. These things you don't want to jump in front of. However, when they do fail, what makes it a good scale trade? What makes it, something where it makes sense to add? And a lot of times people just kind of get too aggressive too soon before they let it actually prove that it wants to fail to follow through. And I think this might be one of the best takeaways from Scan tonight, as well as what I'm going to go over next on ICVX. But, this is a situation where you kind of develop, where is the support? Where is the resistance? Where's that magnet area where every time it comes back to it absorbs and kind of maybe swipes up, or where it peaks out, right? That becomes your channel. And as that happens, then you can start to make, a couple better decisions. And so one bad decision that I typically have made in the past is, you get a good entry and it flushes down. Let me just kind of center this a little bit. Flushes down and you're like, all right, good. I'm on the right side. But it just is going back to that prior level of support, which you can kind of see right over here, right at, 10 a.m. Ramps up, fails to follow through. Great. You want to scale in hard? No. You want to wait for it to swipe back up, or swipe back up and stuff, right? And so this swiped back up and it did not stuff. It went right back up to that level. So had you sized in, maybe you emotionally cover right here. Once again, we go right back to that same level. Is it a hammer in short because it failed again? No, that's the bottom end of the channel. So you always want to, if you are in this trade, you want to build in that swipe risk just in case it swipes back up. You don't want to emotionally cover right away just because. You want to cover because the trade is wrong. You don't want to cover because you have to, right? So in this case, if I was going to scale into this trade, which I have no problem, starting, and I did start into this trade. The trade was wrong. It continued to go. But what I did right is I didn't fight it. I didn't scale in. It's just a feeler starter entry to kind of get my eyes focused, get familiar with the trade, so that if and when we do kind of cross under this level here, start to peak out at the 730s or whatever it ended up being. What was that? Yeah, 730 level. And then it starts to fail to follow through under VWAP. That's my edge. But until then, you should assume that it's going to swipe back up. And it did the same thing at a higher level over here each time that it tested the 740 level, right? Where it flushed under, kissed VWAP, comes back up to 740. First attempt, right back over it. So once again, you want to see these levels and you want to see them prove to fail to follow through, prove to fail to follow through, start to fade off from there. If you're anticipating them to fail, you will get chopped up. And that's where I've donated a ton of cash on trades, trying to force that, not necessarily force a trade, but just try to hammer into the trade and not miss it. But in reality, I'm just going to end up getting, chopped up in a situation like this. So you saw the same thing sort of on GOTU, and the sooner you can identify, it doesn't have to be perfect, just real quick, as fast as I did that. That's it. That's all you really need to know for edge. And you can see that it's stuck in between those two levels. So in order for me to be sizing into this trade or have confidence it's going to break down, I want to see it under this level right here, which happens to be about $3, 295, 290s, something like that. And maybe it matches up with VWAP, starts to fade off. No problem being in a starter, feeler position. That's fine. I can go for a ride on that. But if I'm sizing in and I'm anticipating, I'm going to get trapped. I'm going to get chopped up. And hopefully you guys, can see this. We had the same thing. What was it? BKS? No, not BKSY. Let me go through scan real quick. BYSI, same thing, right? What level? And the level that we talked about in IU was 220. 220 every single time it's stuffed, right? This is a no-brainer stuff move. Slams down. What happens? They absorb it at 220s, right? So right away, you know that if you don't get a stuff move at 220s, then there's a good chance it's just going to kind of hang around and there's not too much edge. So you can see it pop back up over it, stuffed again, slammed. They caught it at that 220 level. So start to recognize where that magnet is, where most of the volume is being absorbed. That's going to help you from getting, run over on the front side of the move. We all don't want to miss this trade, but when there's only a few trades that people are trading in small cap land, these are going to get crowded. And you have to recognize when they're getting absorbed. So that is another example of that. All three of these we went over in the room on Friday. So this was, I think it was Thursday, ICVX. And I said, I'd be walking through this trade. And it was a very nice opportunity. It was an even better opportunity to kind of discuss the why, the psychological reason as to why certain moves potentially happen. So again, I have some charts, and this is not a hindsight kind of going through the process after the fact. This is exactly what we talked about in the room on Thursday, discussing the key levels, where it could go if it did open up range, what level, what levels that would look at. So these were the 4 levels that I was kind of reviewing in the room as sort of spots where until it peaked out, you should assume it's going to continue to go higher, or just don't be emotionally connected to that particular number. So anytime that I post, a channel, I always look for, this particular channel you can see right over here. And as it butts up against the top, which is 1390s, that's how I came up with that 1390 level. And you can see it peaked out here. Well, guess what? Starts to hold a higher low over here, and then it busts through it. So all of this was just a trap setting up this next push. And so we know 1490s from this prior area, right? And then it started to peak out a few times. Anybody that shorted into the top, anticipating it to fail, got squeezed out. So then we had a nice flush down. Comes right back down to 1390s. It holds. So right away we know, hey, that's fine. If you anticipated it and you started into the trade, whatever, in my eyes, you have to be proactive. And we discussed, being proactive in this area because it was holding into this level. It's fine if you want to fight it, but there's a good chance that you end up being this candle or this candle. And if it went into a circuit halt, it would be even worse. So in a situation like this, I always like to not be emotionally connected to any of the channel levels, any of the top or the bottom. I want to be making decisions with a clear mind, not emotionally having to make those decisions. So we had a nice blow off move. That's fine. It slams down, but we did not yet have that secondary stuff move. We did not yet have that retest with any volume that was met at 1490s until we look back, and then it finally comes, right? And it's met with all this volume down here, slams down. And most importantly, this is the one that we talked about right in the room. This retest and slam right back down. And then the secondary stuff and slam was right off the key level, which happened to be the 1390 level. And you can see that move right here. And that's exactly what we were talking about in the lounge, where this is all great, nice steady fade, but is this all shorts, or is this seller starting to come to the plate? How do we find out? We need to see a swipe back up or a swipe get met with volume. And that's exactly what happened right here. So at that point forward, we know that, at this point, 1390s can start to be the risk. And then as it starts to break down, you can scale in accordingly. And then go back to all the prior levels. This is why I post the lines. You can see that it kind of was hanging around VWAP and around this area here. Once it consolidated, flushed down to the next line from earlier. And you can see all the retest fail, retest fail, retest fail. So it's confirming the thesis that, hey, this is now heavy. It's being met with sellers at the 1150 line. So this is one of the cleanest examples that we've had that actually worked out pretty perfectly. And we were walking through it in the lounge, real time for everybody that was recording. So one of the things that I tell everybody is make sure that you record. It's free to record. You don't have to take the trade, but go back and watch with the commentary live. You'll start to see this stuff over and over. It doesn't mean you're going to get every single one. It doesn't mean that it makes it easy. It just allows you to say, hey, I've seen this before. And that's really half of trading. Where have you seen this before? How did you react last time? What did it do last time? And it gives you that sort of imagination of where it could go and then where it potentially could unwind to. So that's really the key concept and the goals with a situation like that. So let's dive in. All right, guys. So for the week ahead, let's get right into it. So GOTU, I'm going to be focused on the short side. Obviously, just because I'm monitoring it for a short does not mean that it has to go down. Ideally, it goes 320, 350, 4. Hopefully, it does something crazy. The China names typically do go crazy. If you look at the sister names such as TAL and EDU, yeah, the charts are big, but they're not super, super overextended. And those are the ones that are kind of fueling this move. So if these continue to grind higher, it's going to take GOTU with it. So with that said, just because this move is crazy, to me, it does not mean that it has to pull back right away. However, I do think that there's a big trade coming. I'm going to be prepared for it. I'm going to wait for them to exhaust out, blow everybody out, and then look for the opportunity back down. And as you guys know with EH, another China example where they trap, they squeeze out, they exhaust, fail to follow through, they really come in hard after. So don't underestimate how far it can unwind, but most importantly, don't underestimate how far it can blow out first, because that's what it wants. It wants to trap shorts for their exit. So that's going to be my main focus, GOTU. Quickly, TAL and EDU, obviously the same. EDU was the only one that I made money on out of the 3 on Friday, just because it had a nice failed follow through setup. You can see that, once it broke under this level of support, which is the key line I had posted in the room, it was a steady, nice fail. And you can see sort of the exhaustion move. You've got this first move, blows through it, comes back, retest, blows through it, test. And then I started to kind of scale in accordingly throughout the day. So that was the one that worked. The other ones I didn't get past a starter entry on, something like TAL or GOTU. That's fine. I'm absolutely good with putting on a starter and losing on it every single time. It's about, not adding into the loser. That's when the real problems come. You want to add into a winner, add once things start to fail. And unfortunately for those, they just didn't set up in that fashion. So those are the main watches for me. Then I'm going to be watching for failed fall through DADA. It's been a nice breakout kind of setup, but this is, is it just going to kind of peak out and start to fail off, or is it going to set up and break out from here? So I'm monitoring for, when it starts to have a little bit of difficulty and breaks under the daily VWAP for a potential unwind on the daily. So that would be what I'd be patient for. And I think this is one of those where you just need to put price alerts out there. BYSI, nice squeezer. I already talked about the fact that 220s were soaking. So this might be just kind of a kick the fade down the road type of trade where everybody came in expecting something. It didn't happen, so then they covered. So it kind of supported the price throughout the day on Friday, but then never really broke down. So I'm going to be watching 220s to exhaust out. Ideally, we have some sort of, rip, blow everybody out that stayed, and then starts to fade off. Unfortunately, a lot of times you'll see these gap down, and then, you wish you ended up holding over. For me, I'd rather not and just kind of attack it out of the 9:45, 10 a.m. fail. AMAM, nice one. This one is a great one. SMMT's been good too, but the thing is, it's got erratic behavior, right? So if you're trading AMAM, this was a great failed follow through setup I participated in. But the thing is, you can't size much, and you just kind of have to take the trade because you don't know if it's going to be fully controlled like SMMT. If you've been trading this thing, you're probably exhausted from it. As soon as you think you're going to make some money, it squeezes back and goes crazy. So anyway, then we've got Rent, which has been holding up extremely well. Same sort of reversal setup that we were talking about. All the wicks of getting bought up. Couple good short trades on it last week, and a couple that did not pan out. 2 times I think last week I ended up losing probably a dime, and then there was one big trade that I had on it. So hopefully it continues to produce. This is going to be one of those where I think it's just about not losing it off radar. Set those price alerts, and then as everybody else forgets about it, you'll start to see it probably come in. And then Peloton, same deal. This was a nice little add-on last week on Friday. I was watching. It's just one that kind of fell off my radar, and I was like, you know what? If the market pulls back, this could be a good opportunity. I always look for other options besides, SPY, and you've got if tech is heavy and Meta's heavy or Apple or things like that. Sometimes you'll see it start to trickle down, obviously, into the market. But Snap and Peloton and all these are all possibilities that people forget about. So that was a really nice, clean trade that I just joined the failed follow through momentum, and it just unwound throughout the day. So I'd be watching for maybe a push back up towards 1080s, maybe even 11 if we're lucky, and then start to fail off from there. But this is kind of the ideal zone to see it exhaust into. NVAX, nice long opportunity. I got long off the open on Friday. That was sort of changing the plan on the fly. I was prepared for a flush off the open versus the 880s level. Ideally, it cracked under 9 and then came back, but it started to firm up. So I went long versus the 970s and continued to let it work through about midday. I didn't make it for this last move, but I'd be watching for potential gap up. 1120s, 1150s would be ideal, and then start to fade back towards flat. And then next is the continuation section. DFLI. This one just kind of came on my radar. It's no position, no real love for it, but this is the type that we've seen lower volumes kind of go nuts. SATX, and again, I'm not saying it's next SATX. I'm just saying keep an eye on it, because these are the type that start to kind of build. You look, they never go away, and then there's some sort of short cover. So interested, but nothing I'm too excited about. RMAD should be familiar for now. Or by now, all dips getting soaked. You can kind of see like that trend line being absorbed the entire time, and we've got pretty much a peak at that 530 line, I guess 550 line. But we're nearing another breakout. I have a small position, nothing crazy compared to what I had on the original swing trade that I told you guys I was on. Dogs starting to come back. I always like to keep an eye on all these other former liquidation plays. RCON starting the trend back up, and SISI we've obviously been watching as well, and they're it looks like they're in the tape on that one. You saw WNW, and this is why we watch them, because they do these huge moves, they promote them, and then bam, the bid pulls out and pulls back a buck. So nice opportunity there just by having it on radar. It looks like they use the pre-market action as sort of maybe they had some buyers in there trying to create some action, and they dumped it all the way back down like usual, like we're used to. So that's why I always keep those ones on watch. Last but not least, couple more. Vapo looks like nothing. I just have a small position just to kind of remember it. But watching for a breakout there. PFMT, no position, watching for a potential breakout. This was an idea on Thursday night, continues to go. And then Root, I did put on a small position, but I don't like it unless 550 starts to build. So I've been starting to see some volume come in. Then it had a weakness. It's kind of trading with the market, I guess, too. But this day kind of interested me because there was a buyer in the tape all day, and then it ended up having a weak day the next day. That doesn't mean it's over, but I did see a buyer on the tape. So if 550 start to base, then I would be interested in it. So that's it on what I'm focused on for the week ahead. I will pick a t-shirt winner next week. I just have too much going on, and it's going to take too much for me to go back and check out the video and kind of pick somebody. So I'll pick 2 next week, and hopefully you guys have a good weekend. As always, leave a key takeaway on the comment section. Hope you guys have a good rest of your weekend, and we'll see you in the room tomorrow.